thank you for tuning in. You're watching the Property Guide in ET Now, your one-stop guide for all of your property investments in the country. Remember, if you have feedback on buying a home or getting a home loan or even a legal problem that you're facing, write to us. Our email ID is at the bottom of your screen. And you can always reach me on Twitter as well. We have an exciting show lined up for you today. We're going to take a look at Hyderabad. What's going on with the new government in Telangana? There have been a slew of announcements being made about Hyderabad. What does that mean for the realty market? In addition, we'll also take a look at questions you sent in on Ahmedabad and Bangalore. In the studio with me today, Ghulam Zia, Executive Director at Knight Frank India, and Ravi Ahuja, Executive Director at Cushman & Wakefield. Gentlemen, it's lovely to have you in the studio. We're talking about Telangana. The Chief Minister, Chandrasekhar Rao, seems to be on a sort of announcement role. He has been making apparently regular aerial surveys of districts outside of the city of Hyderabad over the last 3 months, and he's been announcing that he's looking for land to set up a pharma city, a cinema city, an industrial corridor, and several other projects. Now, these announcements have gotten the Hyderabad realty market very excited. There are various news reports that suggest the announcement to set up these projects in the city's outskirts have led to a spurt of real estate pricing in Medak, Nalgonda, and Mehboob districts. We're going to find out what this means, but first I'm going to bring in Avan to take a very close look at the prices in key locations in Hyderabad. Avan.
Thanks, Faye. Well, the real estate sector in Hyderabad, which continues to lag with unenthusiastic sales volumes, is believed to be transitioning into a growth phase. While it remains one of the lowest priced metro markets in the country, the new infrastructure announced by the Telangana Chief Minister might improve things on the ground. Let's take a look at the cluster of IT-focused markets. Gachibowli, which is home to all the IT big boys like Microsoft, Accenture, TCS and Infosys, has prices currently averaging 3,930 rupees per square foot. This is an increase of just 24% from where it stood in 2012. Prices in Manikonda saw an increase of 11% in the last 2 years. This location, which is a commercial hub and a residential suburb in Hyderabad, currently quotes at an average of 2,675 rupees per square foot. Hi-Tech City, true to its name, has the highest concentration of ITs and ITES establishments in the city. The IT hub, which had prices averaging at 4,200 rupees per square foot in 2012, saw an increase of just 6% since then and is now being priced at 4,460 rupees per square foot. Madhapur, which is a small rocky village in the 1990s, saw a 15% increase over the last 2 years and has prices currently standing at 4,840 rupees per square foot. With that, it's back to you, Faye.
All right, Avan, thank you for that update. Ghulam, I'm going to start with you. I want to understand, what we read in the newspaper is one thing. I want to understand from you what's going on the ground. For people who are doing business with the new government of Telangana, what is the ease of doing business in that state right now with the new government in place?
Well, it is still not, I won't say it is completely in place. We still have lots of room for improvement. And most of the people we are interacting with are yet a bit lost in the melee of new administration, new political environment, etc. So we still see a long way to go to give a positive signal out in the industry.
Ideally, what sort of changes would you like to see? See, because the last time we talked about Hyderabad, we said that now that the whole, confusion about which state and the fact that the problems that Hyderabad's faced for the last 5 years will go away because we have clarity. But that clarity is not good enough because it's not attractive for industry. So what happens now?
Well, last couple of years, because of the uncertainty, political question mark, lots of businesses had suffered. Of course, IT-ITES was one of them, but IT-ITES had a fantastic, fabulous run in last whole of a decade. The problem was essentially faced in manufacturing, engineering, and the whole industrial environment, where it was kind of ignored for last decade and a half because the development of IT was at the cost of the rest of it. And today, when we're talking about Nalgonda, Medak district, these were actually the old industrial areas of Andhra Pradesh. Zahirabad, for all you know, had the biggest automobile sector in Zahirabad, Sanat Nagar and so on and so forth. These were the areas which today looking more like haunted areas because the industry is almost as good as dead. Today, if the Chief Minister is talking about reviving all these areas, well, I would take it as a positive signal.
Ravi, are you hearing anything interesting from your corporate clients? Is anybody interested in Hyderabad or, for that matter, the Telangana region right now in terms of setting up industry or expansion?
So the expectations which corporate clients have is to get far more clarity from the new government. So I agree with Zia, like he said, it's too early to kind of take a call. The government yet is only started making some noises. IT is a given. There has been great organic growth by the Deloittes, by the Microsofts who already been there. But we've not seen some new migrants or new facilities from corporates who already are, let's say, housed in Bangalore or Chennai. They've chosen to skip Hyderabad and go for second and third facilities in locations like Pune. Even Navi Mumbai, Airoli has gained at the cost of Hyderabad. I must say that. I think Hyderabad, the fundamentals are still strong. There is no reason why the government cannot shape up and step up progress. The West corridor is clearly an accelerated zone where IT is playing a big role. Residential rates are quite low. When you compare, for example, some of the central city like Banjara Hills and Jubilee Hills to, let's say, their competitors in Bangalore or Chennai,
No, but that's an unfair comparison. In all fairness, if someone bought a home in Bangalore right now, it's fairly easy to rent it out. But we have complaints from people who've written in from Hyderabad who have homes in high-tech city or around high-tech city who've not been able to find a tenant for the last year, maybe longer than that. And nothing has changed with the new government. So I would say it's an unfair comparison to compare the prices in those locations with the counterparts in Bangalore.
You may compare the pricing just to see the gaps and therefore what needs to improve to get there. So with the residential pricing, when I was comparing, I was just trying to bring to your notice that in the center of the city, the gap is almost 50% pricing compared to these cities. And there's a reason. And the government has a lot of, things to do there.
Actually, I'm going to ask you to make this comparison. Ghulam, we'll start with you. The fact that right now there are a lot of very powerful states that are led by a BJP government. We have a BJP government in the center as well. We know that Seemandra's party and Chandrababu Naidu are allies right now to the government in the center. This particular government is not. Do you see that as a disadvantage in terms of getting work done, or in terms of maybe just aligning itself to the plans that are coming out of the center right now, whether that's Make in India, whether that's urban development?
Well, if you want me to answer as a politician, perhaps there will be a problem. But if you need a business-like answer, I would actually discount this whole argument that it's a friendly government and unfriendly government. And I would rather focus on the ability of these state governments to do it themselves. Obviously, the central government will help. But except for that, I don't see much of a deterrent.
But Ravi, tell me this. If I were making a pure investment in Resi right now, and I want to buy a home, my choices are I buy in Hyderabad and wait 5 years for these things to ripen up, like Ghulam said. Or for half the price, I can buy in Vijayawada and wait 10 years for things to ripen up. If you had to choose between the two, which one would you choose?
I would probably choose the former. I would go for Hyderabad, and clearly within Hyderabad, I would further drill down just in the western corridor because that's where the action is. Vijayawada, like you rightly said, it's long term. Both the governments, they have their task cut out. But clearly, Hyderabad is a global city. It is having strong fundamentals, and the pricing from an investment point of view is looking very attractive. So there is a dark horse kind of situation building up there.
Ghulam, do you agree? And if you do, give us a clearer view of what portions of the city you would recommend.
Well, I can take a complete negative position on the whole subject of real estate investment actually. Whatever said and done, a state like Hyderabad, even if you talk about Bengaluru, over a period of time, except for some sudden upsurges which have come in purely because of infrastructure differences or infrastructure improvements, the real estate prices have actually remained more or less very flat. So if I have to take a very, very general view and then talk about Hyderabad coming down, say even if something you're buying for 3,000 rupees, In 5 years, if it is not going across to 6,000 rupees, it doesn't make any investment sense. And that's the whole point. Do I see in next 5 years Hyderabad prices moving up to 6,000? At least my answer is a big no. So in which case, if your returns on real estate are those 8-9%, then why not FD? There are so many other routes to invest. So at least the way I look at it, while your growth will happen, but if you look at inflation also coming in and negating the inflation, then your investment doesn't make sense to invest anywhere in realty.
Anywhere in realty across the country, or are we just talking about Hyderabad?
As I said, unless you're talking about some sudden upsurge coming in because of some huge change in infrastructure. Say in Mumbai, if you have the Worli-Nariman Point link coming up, then obviously Worli will be better off because value addition happens. Except for that, there's hardly any reason for the prices to go up.
Okay, so we're no longer debating Hyderabad right now. We're talking about the fact that it doesn't make sense to invest in property because we might not see any of these returns for the next 5 years. Do you agree?
Well, on two issues. One is Hyderabad per se. I see a lot of supply coming up. So when you talk about the metro corridor, and the L&T is a classic example of a PPP, and given rights to develop almost 18 million square feet across those 3 corridors under the PPP project, there's so much of supply to come. So in a way, you may agree that from 3,000, if the price really can't go up to 6,000 in 5 years' time, with so much of overhang of supply expected, it may be better to look at other asset classes. Having said that, I do not agree that real estate as an asset class or residential as an asset class is no longer an attractive investment. There are pockets one has to study, be cautious. But however, there are new governments in place, there are plans being rolled out, infrastructure. So, for example, if you have a high ticket value investment, Bandra East, close to Bandra Kurla complex, is probably one of the best spots in Mumbai city to invest, which pre-launch is around 27,000 rupees a square feet at built-up area. We expect rates to go to 35 to 40,000 rupees a square foot. Likewise, all other cities have these, kind of locations which need to be studied, and they have to be very cautiously invested in.
All right, so the show's taking a completely different turn from what I expected, but this is what we're gathering from it. Hyderabad is going to take some time. Prices are still quite attractive. But the interesting thing here is that both of our guests agree that investing in real estate to see your money double over the next 5 years is going to have to be very, very smart work, because A, you'll have to find the right location, which is the mid-cap that's going to break out, and you have to find the right project and take that construction risk. We're going to come back and talk a little more about that, but before I go into break, what we've done is we've put together a list of interesting projects in Hyderabad right now. Take a look.
If you're looking to invest in Hyderabad, then here are a few options for you. In Gachibowli, Bonsai Homes by Encore Infrastructure, Inspire by InfoCity Projects, or Gayatri Hills by Srinija Infrastructures. In Manikonda, Flotilla by Elegant Infratech, Sangeet by Concrete Constructions, and in Miapur, Gardens by Jewel Construction, Elite by Prajapati Construction, and in Banjara Hills, Tulips by HSR Ventures, or Krish Valley by Sri Krishna Developers.
Welcome back. You're watching the Property Guide in ET now. Thank you for staying with us. A quick reminder, before we went into break, we talked about investing in Hyderabad, and then from there we talked about the fact that it's unlikely across the country in most of our cities that we'll see the price of property double drastically over the next 5 years or so, which means that if you do hope to make a really, really smart investment, you're going to have to be able to find the right location, and you'll have to invest in a project in either the pre-launch or the launch phase. So tell me this, let's start with location first. If I'm going to find the right location, how do I pinpoint that location in any city that I'm talking about? Is there a list that you use? Is there a checklist that we can use as investors?
As I said, there are external and internal factors on any project. The external factors are related with infrastructure improvements, obviously, and 2 is job drivers. These are 2 major reasons. Of course, then there are secondary reasons like healthcare, education, and so on and so forth. These are social infrastructure requirements. So based on these things, you decide how the future of a particular project will phase out. And having said that, next you have to look at the project that you have identified. If it is involving development risk, it is something which is at initial stages, say IODCCs or just about launched and startup, etc. Then obviously those 2-3 years, because it's the execution risk, the financing risk, and lot many other things, regulations, etc. coming in, then obviously you can look at least 25-30% price increase coming up due to all those risks that you have taken off the shoulders of the developer. So these are two things which you have to carefully watch before deciding right project for investment purpose.
Ravi, if I were to make an investment in any of the big cities right now, I mean, one of the problems is that there are various developers in the market whom we haven't heard of before. They're fairly new. Maybe there were local developers who are now building, across the country. How do we make sure that if I'm getting in as an investor, so there's no way to making sure that the infrastructure, the flyover or the bridge or the train line is going to come in on time, but at least to make sure that the builder that I'm building with is going to finish that project on time?
So we've discussed this many a times, the checklist which an investor should keep in mind before investing his money. So title, how the land was acquired, was it clear? The reputation of the developer, the track record of that very developer in terms of delivery. You can study some of his other projects that he's delivered on time. And more importantly, if he is an old hand at it, so much better. So you can know the quality of the project has been sustained over the last 3 to 5 years after delivery. All of that said, I would like to add that it's important that these are a set of parameters while deciding. But when you zero down on the location and when you talk about the big cities, today there are projects which are well located, done by reputed developers. However, while they may be well funded as well by some of the private equity funds, today sales are stagnant. And having said that, if a developer is facing cash flow situation with stagnant sales, they are launching schemes. We've been used to the 2080 schemes, the subvention schemes. So such schemes are available. One would, probably be smart to identify these schemes and then take a calculated call on doubling in 5 years, like we said. Bangalore is seeing stable IT growth, and that will continue. Probably, I would say, if you're going to be smart with your locations, while the prices have run up, you could still see a 5 to 10% per annum appreciation. You talk about NCR. Now that's a stressed market. We've already seen price correction 15-20% and somewhere 25-30% distress assets available. Delhi itself will have a lot of land available going forward, given what the government is opening up. And therefore, within Delhi, if you would dread not to go towards the Dwarka expressways, which give access to Delhi, because you don't need access to Delhi if you're right in Delhi getting 6,000, 7,000, 8,000 rupees square foot eventually in the newer areas which are opening up. So I think one has to be smart about these investments, yet have a long-term view, 4 to 5 years minimum, and real estate will always pay back, and then one could take these calls.
A quick recap of what we talked about. When you're picking a location, there's infrastructure, social infrastructure, and job development in that neighborhood that you should look at. And futuristically, it doesn't make sense to look at a neighborhood that's already developed. The prices would have already run up. While you're looking at the project, look at it at the pre-launch phase. Look at the reputation of the builder, his track record, the longer the better, and use a subvention scheme if you can. Of course, you can write back to us if you have any questions in particular. Let's take a couple of the questions that came in during the week. Hitesh has written in. He wants to buy a 2 or a 3 bedroom in Airoli or Ghansoli in Navi Mumbai with a budget of 1.1 or 1.2 crore rupees as an investment. He says he's open to considering Thane as well, but not beyond Ghorbandar Road. He plans to hold this property for 5 to 7 years and he's looking for possession in about 3 years. Please give some advice. So obviously he's doing most of the things that we just talked about. He's that kind of investor. What would you recommend he does?
I think the 3 locations he said, all 3 have potential for different reasons. Airoli, it's a already established ITS destination. We've seen a huge migration from Malad, Goregaon, moving to Airoli for cost reasons, and IT companies, the minute they get over a $1 per square foot per month rental, they shiver. So I think Airoli will continue to attract ITS companies because of the 2 large Gigaspace and Mindspace which the Rahejas are developing almost on a monopolistic basis, but they're attracting a lot of crowd over there. So job employment and IT crowd will continue in terms of actual user. White collar will continue buying there. The other location he mentioned was Thane. Thane has great social infrastructure. I think the budget that he refers to on Ghorbandar Road, there's a lot of developments happening. There are developers.
If I asked you to choose between the 2?
So if he's making an investment, I think Airoli has better long-term prospects. But as an actual user, I would probably stick to Thane. I would differentiate between these two locations from an investor versus actual user.
All right, let's take another question. Harsh Gandhi has written in. He wants to buy a 3-bedroom in Savvy Swaraj Sports Living Project in Ahmedabad. The property costs about 67 lakh rupees at 2,900 rupees a square foot. Please advise if I should go ahead on that property. Which of you wants to take it?
Yeah, I think on Ahmedabad, this location is close to the Nirma University location, and it's a peripheral location of the SG highway connecting Gandhinagar and Ahmedabad. So I think from a future point of view, it holds great promise. It's just about 5 kilometers from Gota Circle and about 10 kilometers from main Thaltej Circle. That makes it connected. Rates prevailing there about 2,900 to 3,400. So he's right there ballpark. 45 to 68 lakhs between 1,500 to 2,000 square feet of apartments are available.
So go ahead.
Yes, very much.
All right, so go ahead on that one. Welcome back. You're watching the Property Guide in ET now. Thank you for staying with us. Both Ravi and Gulam are here to answer your questions. Mainak has written in, he's looking to buy an under-construction home, a 2 or a 3-bedroom flat for end use in Bangalore with a budget of 70 lakh rupees. Hopefully, possession by the end of this year, he says. He's interested in Whitefield, Hudi and ITPL locations. Please give me some good projects. Gulam, do you want to take that?
Well, Whitefield obviously is the most active real estate zone in Bengaluru. Obviously, because of the entire IT developments in the Whitefield and ITPL and so on. So actually finding a developer is not going to be a big problem. There are multiple projects which are under construction, right from the very established names of Brigade, Zivishries, etc. And on the other side, even the upcoming new breeds, the Total Environments, even Piramal has launched a project there. So it's a pretty good mix of the reputed old names vis-a-vis the new entrants in the business. All good projects and plenty of opportunities there.
All right, let's take another question. Senthil Nathan has written in, he wants to buy a 2-bedroom flat for a budget of 40 to 60 lakh rupees purely as an investment. Give me some good projects in North Bangalore. That should bring him something in Hennur or Tanisandra. With that budget.
Very much. You're right about the location. So North Bangalore, I would highly recommend because from a long-term perspective, gives you great access to international airport and connectivity. In terms of important infrastructure developments that will make North Bangalore come up, it's really the Bellary Elevated Expressway, the high-speed rail and the metro. Tanisandra, Hennur, both of them great locations. In addition to probably another one called Doda Ballapur, which he may want to consider. 35 to 80 lakhs can be a budget. It's a go. Great developers there, Nitesh, Mantri and Ozone Group. He may want to consider any of these.
All right. Tanisandra Hennur or Bellapur in Bangalore. Saroj has written in, wants to buy a home for end use in Bangalore, which will be complete in the next 6 months. Budget is approximately 60 lakh rupees. Please give me some good projects. This is interesting. Very rarely do we get a question from someone who wants to buy a home to live in, but doesn't pinpoint a particular location in Bangalore. So assuming the location, is an open this thing, what can that budget buy?
In Bengaluru, more than social infrastructure, it's the job, which the job drivers are also important because the distances are huge. Okay. So if one has to go from North Bengaluru to East Sarjapur, etc., you could end up being on the road for an hour and a half. And that could actually be a complete decision-making criteria. So, well, as far as social infrastructure is concerned, Bengaluru is pretty well established. All across you will find good educational institutes, etc. Obviously, healthcare is not something which you require in 5 minutes travel distance from your house. It's absolutely ideal situation. But I would say even healthcare is not that difficult to connect to. So I'm saying I would rather focus, if I have to be taking that call, I would rather focus on where am I working and accordingly take that call.
All right, so decide how far you're going to have to drive every day. And I grew up in Bangalore. Distances were not a problem when I was growing up in the city. Unfortunately, we've run out of time. Thank you so much for tuning in. Remember, send in questions for both Ravi and Gulam if you'd like to. You can also follow me on Twitter. Thank you, gentlemen, for spending time with us this week. Thank you so much for watching.